Hello, this is Aura from OTET Markets. We'll be with you with the global economic outlook in the week ahead, which is going to be the week number 41. Last week, mostly in China, it was a holiday. In Japan, we had a new prime minister. In Europe, the focus was on PMI numbers, but most of that on inflation data. And in the United States, the most eyes were on US labor market data or NFP numbers. In China, after Monday's weaker than expected PMI numbers, the rest of the week was not such a busy week, and most of it was closed. We know that China, before starting the holiday, they published a new stimulus and supporting packages with which it had a different parts to support the Chinese economy. We talked about that on a monthly outlook. You can read that on our weblog or website. And then in Japan, we had a new prime minister. We know that the previous prime minister told that, somehow accepted that he couldn't control the inflation and support the economy, so it's better to resign. And a new prime minister started, and we will have the election sooner in probably next week. I think it will be the next week in Japan as well. Anyway, the new prime minister, as soon as it's elected, as soon as it started its job, and he made this point. He made this point that central bank should not be hurry to increase the rates because the Japanese economy still need more support, which ended with the weaker Japanese yen. In Europe, we had the PMI numbers. As you know, the PMIs even thought in the countries that it was better than expected. Generally, PMI numbers showed the weaker than compared to the previous months. We showed that the weaker economic growth in the Eurozone. With the same condition we had in Britain and United States as well. But in Europe, the mostly focus was on the CPI numbers. The inflation, consumer inflation, fell to 1.8% in Eurozone. That means that the European Central Bank, despite the earlier expectation, can cut the rates by 25 basis points as the inflation is very low and economic growth also facing some challenges. So therefore, most probably we can expect another 25 basis point rate cut in September 15, that when ECB, European Central Bank, will hold its monetary policy meeting. And then in the United States, the focus was on labor market data. Inflation, after lower than expected inflation, lower than expected inflation growth in Europe, actually. The focus became to the United States labor market data. In labor market in the United States, we saw that the 200 PMI numbers, which I told it was weaker than expected. Yeah, here is the labor market data with the 254,000 newly created job in September and unemployment rate falling to 4.1%, while with the 62.7% participant rate, we had 0.4% monthly growth in average income and 4% annual growth. These numbers, they show that the economy is still fine when you have improving labor market. It means that the businesses, they have a place to give you the job, they have an income, so they have a businesses, they have a sale. That's why they are hiring. So these numbers means that the U.S. economy should not be as weak as the previously was expected. That was what happened last week in economic countdown. But we should remember that the geopolitical tensions was very high. The Iranian, they attacked Israel with 181 missiles, in which Israel also told that we are going to have a very hard response. So that made the geopolitical tension to stay high still, and for the coming week also we are expecting any day soon. Some analysts they're telling that it can be after October 7 when we had a Palestinian attack on Israel last year. Some analysts they say that this attack of Israel and attack on Iran can be after that, after the holidays, New Year holidays in Israel, and also after that October 7. But someone else also, they say that before October 7, they will show their power. They want to show their power and attack on Iran in response of Iranian attack on Israel last week. So let's see what happened. But anyway, what's happening here? The geopolitical tension is high, and that can push put the pressure on the risky stocks, on risky markets, and risky the assets, and increase the safe havens demands, including US dollar, including gold, silver, Japanese yen, and so on. Another thing that we should remember in the week ahead before going to watch the economic calendar, we should remember that this week earnings are starting with Delta Airlines earnings on Thursday, and then Friday with the banking Wells Fargo starts, and with other banks they will start on Friday. So earnings are very important from this week, which they are going to start the third quarter earnings. We should pay more attention on the earnings reports, as they are mostly going to move the markets and lead the market in the next 2-3 weeks. Let's go to the chart. Let's go to the economic calendar. On Monday, generally, this week is not going to be a busy week in the economic calendar. I have to tell you at the very beginning. In Japan, we have household spending, very important. We have the Japanese cash earnings, labor cash earnings. They are also very important. These numbers will explain that how the economy is growing in Japan. But generally, we are waiting. We are not with this current government, with this new government. We are not expecting any surprise in the Japanese central bank's decision. Most probably they will hold these current rates until the end of this year, and rate hike will probably postpone to the next year in January or February meeting. Generally, we are not expecting any changes in Japanese economy in a market, but most probably with if geopolitical tension increase, then Japanese yen can get more support because of its safe haven demands against its rivals. In United States, focus will be on the inflation numbers, which is going to have to be published on Thursday and Friday. Thursday, we will have the consumer price index or consumer inflation, and Friday, we'll have the producer inflation. Both consumer and producer inflation expected to increase by 0.1% on the headline and 0.2% in core numbers. CPI on the annual rate should supposed to fall to 2.3%, down from 2.5% in August, and core CPI most probably will stay unchanged at 3.2%, or maximum it's going to fall to 3.1%. This is what the market is expecting. If these numbers happen following the last week's weaker than expected economic growth data, but very positive labor market data, we're going to have a mixed numbers, which means that the central bank in the United States can decide to not going so fast and even if they want to cut the rates, they cut the rates by 25 basis points, actually 25 basis points or 0.25%. We could understand that from the speeches as well, which we had last week during the week. We had many speeches last week from the Fed Chair Powell and other FOMC members. Generally, that's what we're expecting in economic calendar. It's not going to be such a busy week in economic calendar. Usually after the NFP numbers, we are not going to have a busy week. I should mention that on Wednesday we have RBN's interest rate meeting. Reserve Bank of New Zealand will have its interest rate meeting, which is expected to cut their rates by 50 basis points in Reserve Bank of Australia. Also, we have a Federal Reserve Fed meeting minutes, which is going to be published on Wednesday, which is very also important. We're going to have more outlook on what central banks they decided in their last meeting in September, and what's going on. Probably it can show more the divergence between the FOMC members and their economic outlook and their decisions, which can be positive for US dollar and put this pressure on the stock markets. Let's go to the chart and see with these numbers and these data what we are expecting from the chart. US dollar index increased at the last days of on Thursday, mostly on Friday, after very better than expected labor market data. But how that going to continue? It's dependent on two things. First, geopolitical tensions. Higher tensions means more demand for US dollar, for the cash and US dollar, which is the positive or safe haven demand of the US dollar. But still, there are other data, economic data, and speeches that can mean that we had a 50 basis point already rate cut, and most probably we're going to have another rate cut, 2 more rate cuts this year. That can put a little bit pressure. So we are expecting to see the US dollar not weak, not so expensive, not so powerful, but among 100, 120 and 100, 180 around these levels. As in a gold market, gold's after more than 34% gains so far this year, we're expecting some correction. We were expecting actually some correction around these levels, but geopolitical tensions and the higher risk in the market held it back. This appears to go further, fall further. So that's going to be happen next week as well. We are expecting some corrections, but these corrections depend on how geopolitical tensions goes. If the geopolitical tensions increase again, then this correction will probably can continue around this so fast because the side movement and correction can continue faster in these levels and increase more prices to increase in more higher levels. But still, it's dependent on geopolitical tensions, economically and technically and fundamentally separate then the geopolitical tensions. You can say that the gold is supposed to have a correction, but still, from the technical point of view, as long as the gold is trading around above 2,580, the bulls will be on the market, and they will lead the markets. In the stock markets, S&P 500 increased after NFP numbers as the data showed that the economy in the United States is not so weak, and it can sorry, the chart is updating, is not so weak. So we are somehow avoiding the expected soft landing or any crisis in the US market, which means the positive news for the stock market, the current as the companies they can gain more. So the positive news for the stock market. But on the other hand, it means that the central bank in the United States will not continue the rate cut very fast, which is the negative news for the stock markets. Anyway, the stock markets cannot increase much more than this at the moment because of the geopolitical tensions we have in the week ahead, higher geopolitical tensions that we have, and probably the market going to adjust what happened last week in the economy, in the United States economy. But on the other hand, at the end of the week, when the earnings are going to start, the stock markets and the Wall Street mostly will be affected both by the earnings reports and outlooks that the companies they're going to provide for the next quarter and whole 2024. So the Bitcoin, the biggest cryptocurrency, confirmed that it is not a gold, digital gold, because as its behavior showed and confirmed in a recent tensions, that the gold, the consumers and the investors, they are expecting, they are mostly investing on safe haven, such a traditional safe haven, such as gold and US dollar, rather than the buy the Bitcoin. So the Bitcoin confirmed itself mostly such as stock in tech stock and technology stock, and not as a digital gold. So with the gold price, not the gold, the Bitcoin price also will depend on the geopolitical tensions. So in the next week, if the geopolitical tensions increase, the Bitcoin price also can be under pressure, and vice versa. Generally, as long as it's trading above 60K, it can move toward a higher, because 60K Bitcoin got a very strong support around the 60,000, and higher than the 60,000, we can expect the bigger numbers and the bullish trend. But breaching down under 60,000 and then under 57,000, it can change the market direction. Generally, that was what happened in the market and what we're expecting for the next week. If you had any other question, do not hesitate to write in the comment section. I will try to get back to you as soon as possible. Have a good week ahead. Bye-bye.